Welcome to the Supported Living Property Podcast with your host, me, Lisa Brown, the place to learn about supported living property investing. Hi, it's great to have you here today. I'm really pleased that you're here, both of you, to talk about what we're going to talk about today. Kristy, do you want to start? For those who don't know you, do you want to introduce yourself and tell people a bit about you?
Yes, hello everybody, I'm Kristy. I'm part of Auxilium and KISS, and we're here today to talk about our REIT Authenticity, which is a newly formed REIT. So my background, I have been kind of around the space for quite some time, worked in the public sector for 20 years, working alongside housing policy and also like financial services. So I've been around in the sector a while and then wanted to kind of find a solution within the sector, met Isabel and Simon, and our companies and what we are doing now was formed. So I'm super excited for the future. As well as that, just opened up a provision myself, just to practice what I preach. Some people might see me on social media. So that's piloting through a proof of concept as we speak. And that is all focusing around mental health, and that's called Soulful Mind. So pretty exciting 2022, and I can't wait to experience it with people.
Fantastic, brilliant. And Issa, do you want to introduce yourself and tell people a bit about you?
Yeah, of course. Well, first, thank you so much for having us. Super appreciate the platform. So I was originally from Argentina. I was born there. I grew up in Brazil. I did boarding school in the UK and then went back to Brazil for a gap year and ended up being part of an organization called Teto, which means roof in Portuguese. Ended up building quite a few houses in the favelas and the shanty towns of Brazil. I think I built around like 20 houses like myself with like a team of other people. Super transformative, and that's when I realized I wanted to work with social impact, but from more of like an investing perspective. So like I'm very into like impact investing and that whole space, ESG, CSR, or as it used to be called before. So like corporate social responsibility, for those who are not aware of what that means. And so I always thought I was going to go down that route, and ended up meeting Kristy and Simon in a property course, and now here we are, a few companies later, and a few challenges and successes, a lot of challenges, and yeah, happy to kind of share some of those along the way.
Fantastic, thank you. It's great to have you here today. Now, we're here principally to talk about your one of the new things that you're launching. As you say, you're both incredibly busy. You've got so much going on, but that's the REIT that you're launching. For people who don't know what a REIT is, do you want to explain what that is?
Yeah, sure. So a REIT basically stands for a real estate investment trust. It's just like a vehicle that allows people to invest into different types of properties. There are several. The REITs were kind of initiated in the US, very, very used in the US, and came to the UK a few years ago. There are not that many. I think there are only a few REITs in the UK as of yet, but they're growing. They're growing a lot because of its benefits. And so basically, the REIT is a normal company. It's just that it sits under a tax regime, which allows it to be a tax efficient vehicle. So that's very beneficial for, let's say, like people that have SAS money, because they're able to invest in residential real estate. They wouldn't do otherwise, because the REIT is considered a GDCV. So that's kind of the initial reason why we kind of created it. But that's what a REIT it can buy, it can flip properties within a specific structure that allows you to kind of have investors from all over the world in order to invest in one strategy that you want to do. And what strategy that we wish to do is social and supported housing.
Fantastic. So it sounds like a really powerful wrapper to be able to do that within. What is it that you hope to achieve by this REIT? What is it that you want to achieve by setting this up?
So I say it, Isabel.
Yeah.
Right. This is what I say to everybody. I would want to help loads of people. It's always been my passion. So for us, it's about housing many people as we can to scale, but doing it sustainably. And therefore, that's why the kind of REIT's been created, to do that, so that we can actually control the acquisition process. So that's where we're coming from, and that's why we've created it. Do you want to add anything, Isabel?
Yeah, so I think one of it's nice to develop the companies that we created, KISS and Auxilium, allow us to bring in more investors into the space. So KISS is a sourcing company that sources properties to individuals that like the social and supported housing space and want to have properties with contracts in the space. And then Auxilium brings in those contracts. But unlike a lot of the REITs in this space, the contracts are short contracts. So, like circle contracts, 5 years, 3-month break clauses, 6-month break clauses. Some contracts are 2 years, some contracts are 3 years. It depends on the provider. So what that doesn't allow is for the valuation to be based on the lease of the property. And so you don't have like a super valued property because of the lease that it holds. So that means that your returns are obviously lower than they would be on the more specialized schemes that you would find within REITs such as Triple Point and Civitas, that are two of the biggest REITs in the space, but it's a totally different market. And so we realized that there is not really a REIT that operates in the sector that we operate in. And there's so much demand. It's absolutely nuts. And so we wanted to grow so that we are able to accompany that demand, both from the investor side, but also from the provider side. And so I think like that's one aspect of it. And I think
sorry, just digging into that a little bit, I think it is really important because there's a lot of bad press, and rightly so, around some of the REITs, because some of the practice is dubious, probably, isn't it, that we see a lot that's going on around some of the REITs. And I think that's almost given a lot of investors a bit of almost like the word REIT has almost got a bad name because of that. Because
it does,
it's going to mean that that's how my money is going to be used. It's going to be involved in some of that, perhaps potentially some poor practice. So
no, 100%. That's what we wanted to kind of mitigate. Kind of change that name, the reputation that the REITs have within the space, because REIT is not, it's not a bad thing. It's a vehicle of money. That's all it is. I think that like a lot of developers have done it in a way that isn't ethical, and it's sustainable for a lot of these organizations like housing providers and charities and etc. that work in this space, that have created a negative connotation towards the REIT. But it's just an investment vehicle. That's all it is. So that's what we want to change, not only for the investor side, but also for the provider side, and to show them that it's a good model, and it allows you to bring private money into this space in an ethical way, and with low returns. It doesn't have to be exorbitant returns for the REIT as well as for the people that own the REIT. And because we own these other two companies, our money and our expenses of the REIT are extremely small, because we make money elsewhere through this like 360 model that we're trying to create. So that's like kind of one of the reasons, but I think it's important to also note that another reason why we created the REIT is because we have sourced a few properties so far, and one of our clients that has bought 2 of the properties that we've sourced said that even though we tried to create like a very offhand approach to investing in this space, you're still buying a property. The headaches are still there. And so they were like, actually, like next time I'm just going to put the money in the REIT, because like I want something that's even more offhands. So I wanted to give like a possibility for these investors that wanted something even more offhands as what we're already giving them, an option to invest in this space. So that's kind of why, another reason as to why we decided to kind of do this.
And so you're principally looking at sort of lower level support needs, am I right in that, with these shorter term contracts, potentially leases on the properties, and as you pointed out, they're quite short break clauses within them, aren't there? So potentially these properties could be returned to you within those times. What I just can hear people asking this question, that's why I'm sure you've been asked it a lot. So what does that mean for the REIT? What, you're holding a property that's then been returned to you because the lease has expired. What does that mean for the REIT then? Have you got a plan with that?
That's the demand. So the break clause is there for the benefit of not only the provider, but also the investor. So the way that REITs work is that you're selling, you issue either preference shares or ordinary shares. We are in our initial launch, hopefully by the end of this month or start of next month, we'll see, but hopefully by January, will be preference shares. So that's kind of like a capped coupon that you're able to sell to people. But these things is that these shares are redeemable. So people can technically sell those shares to either other people or to the REIT itself. So if, for example, an investor ever wanted to get their money back, we aim to have the money in the REIT for a minimum of 5 years. There's a benefit people of having it for longer, and that's within the option, our launch package that we have created. But you're able to then sell that shares back because we're able to get out of those contracts. That's why we plan to keep it as long as possible, so that we can keep those properties with those contracts for as long as possible. But that is an option for the investor, so that's technically a benefit there. In terms of what happens if the provider enforces that break clause, it's a very valid point, and it can happen. It doesn't happen very often. Like Circle, for example, gave back, I think, 3 or 5 properties last year, and I think they managed 3,500. So it happens, but it's extremely rare, and that's why we do the soft checks before we even purchase the properties. But if it was to happen and we did have to sell that property, then we would just have to buy another property with that money, and put those funds elsewhere. And because the value of the property isn't affected by the lease, you can still sell the property by the same value that you bought it as a minimum, because the property in the UK tends to increase, right? So either there's a profit to be made because we're having to sell the property because it was held for, let's say, a year or 2 years, or we just take that money and reinvest it elsewhere.
Yeah, and also we do have multiple provider exits in areas. We've been very stringent on that, because if we do ever need to swap or replace, then it's really important to have that in place as well, as I'm sure you guys do.
Yeah, it's really important. I think it's really powerful. In the shorter term lease, that's where people are going to see it as a risk, aren't they, compared to the other REITs? And having that backup and having that plan is really powerful. And I think that's that's going to really give people some reassurance, isn't it, about the structure of it all. So you feel like the REIT will achieve, one of the questions we wanted to talk about was, why will the REIT achieve this? And I think you've kind of talked about that from the beginning, really, haven't you, about the power of it, being this investment vehicle that also allows people to do it in a hands-off way, which, as you say, a lot of people want that. They don't want to be hands-on at all, do they?
Yeah, like the REITs is a much more professional structure. I know the property space is used to, like, a lot of these limited companies. People do loan agreements, put money into these companies so they can do projects together, JVs, etc. A REIT just basically professionalizes that whole thing. Like, it's regulated by HMRC. We're under another REIT that is being audited by KPMG. So we are basically audited by KPMG. So it's all very is as professional as it can be within the real estate space, which we all know is kind of like the Wild West.
Absolutely.
Yeah.
We've definitely mitigated stuff by putting those steps in place, just to make sure and assure our investors that we do have those things in place.
It's very heavily regulated, isn't it? As you say,
super heavily regulated. As more people get in the space, the more regulated it'll become. But because the model kind of comes from the US, it is extremely regulated. So there's no faffing about. It is like the returns are what they are. You have to pay the coupons that you said that you were going to pay, but it's not like you basically get what you're investing in, and there's no hidden fees or anything like that as well. As sometimes there are when there's JVs and stuff like that, and if there are any issues that happen throughout the project, the profitability of the REIT is there, and what affects. Let me rephrase that. If, for example, a refurb was to go over, that does not necessarily mean that the investor is going to get a lower return, because there's profitability in the REIT. It means that our returns are going to be smaller. So the risk of the investor is extremely small, because we are taking on the risk of actually something going wrong within those refurbs that we do very little of. Most of the properties that we buy are almost already made properties. Sometimes one of the biggest issues that we have may be damp, and that's the biggest issue, because the refurbs are just maybe adding a stud wall, having to do the electrics, making sure that the house is HMO compliant to the standards of the council. So they're small refurbs. So if there is to have anything gone wrong, it will be a small number in the grand scheme of things. But I know that going back to your question as to what our goal is, what we want to achieve, our first fundraise is going to be of £1 million. We do aim to use lending in the REIT, and we're kind of looking at some final possibilities now as to what kind of lending we're going to be using. But our idea is to like raise the £1 million, like buy all properties in cash, and then we're going to leverage out after, because we want to make sure that the acquisition is done properly, and that more people are housed faster, and that the lending issue is then happening in the back end while people are already being housed. And our target is to reach like, we want to house like 5,000. We don't have like 5,000 homes in our names. Like, it's a lot of homes that we want to. I kind of made a quick calculation before we actually had this call as to how many, according to the equity that we want to raise. So we'll see if we get there, hopefully. But first, we need to do the launch. First, we need to fundraise the initial portion.
Proof of concept, as I like to call it, because that's what it. The first one's your proof of concept, and then you move on.
Yeah, completely. It's really exciting. It sounds really exciting. I can imagine there's been an awful lot of challenge to get to this point. I can imagine it's been a long journey of learning to get here. How have you found that? What's your experience of that been so far?
Shall I, Kristy, or shall you?
They're both grinning at each other, trying to work out who's going to answer this one.
I'll check in, Isabel. You can start.
Okay. Yeah. The challenge is like it's in the three companies. Like initially, like last year, this is why I kind of come from an investor side. So initially last year, before, just as I was meeting Simon and Kristy, I actually wanted to open a REIT. I wanted to open some kind of fund to be able to do exactly this. But it was extremely expensive, and I just didn't really know how. I didn't want to invest the money into the fund. I wanted to invest the money into the properties. So that's kind of where I kind of come from. Like over the last few months, like opportunities came by and allowed us to open the REIT, which is obviously super exciting. But until now, we haven't had a buyer that we control, in that sense that we control the acquisition process. So it's been super challenging from the sourcing side. One, because the property market is super buoyant. It's really difficult to find properties out there, as you know, as a lot of the investors that are probably listening to this podcast are aware. Extremely difficult. Like they go within days, So not only finding the properties that actually like the numbers work, but then that the providers will accept and are good, because a lot of people think that properties that are cheap are going to be good for social housing, and that's usually never the case because of high crime rates and like antisocial behavior and saturation. The providers that we work with all like make sure that that's not happening in the areas that they're renting properties in. So before we even spend any money on the properties, we make sure that they are able to take those properties in the right areas. So these are all like more or less like good areas. And so finding properties that have an okay value for those areas that work from the rental yield that are given by the providers is a challenge. So property pipeline is a challenge. But more importantly, I think, is like we've had some like investor challenges, like investors getting issues with lending in this space. It's challenging, and taking 6 months to even complete on a property is challenging, because then it's, all of the back end of Auxilium and getting that property handed over to the provider becomes a challenge. Some refurbs and getting builders paid and stuff like that can like sometimes be challenging when you're not in control. And even for the investor, like I would say, it's a lot of work to buy a property. And investors like do come like with us to avoid a lot of the challenges that they face from even the sourcing side, not even like even from our perspective and the buy and the properties that they are trying to buy. And so even because we know the property, we understand the cycle, the supply chain of this process, because we're in it. It's easier for us to kind of make it happen quicker and make faster decisions because we understand it and we're the ones controlling it. It's difficult for an investor who's, let's say, in Dubai or Abu Dhabi or Australia to kind of like have a feel as to what's happening. So there's a lot of uncertainty that needs to be constantly kind of managed from our perspective regarding that side. From the provider side, I'll let Kristy kind of talk to it, but like there's so many challenges regarding finding the right ones and making sure that they are doing things properly. So I'll let kind of Kristy talk a little bit about that.
So you know this, Lisa, because you talk to providers as well, but it is actually finding the right ones and signing them off and making sure they pass your due diligence. So for every, I'd say for every 20 providers I speak to, I probably sign one off. Just because, when you start to open up and talk to them about their, their processes, their systems, how they operate, what they do, how they're funded, things are flagged, unfortunately, and therefore it it's all about protecting both them and the investor and making sure that we can kind of work with them going forward. But we are very blessed. We have some great providers on our books. I think I've spoken about this a lot on social media. You don't actually need that many providers, you know, to cover nationally. So we've been really, really kind of blessed in that way as well. But yeah, just from a provider perspective, just keep chatting to them. I'm really looking how they come to me. And yeah, just kind of onboarding them and making sure they're okay, and doing the ongoing due diligence, because things do happen on the way, and then thinking of ways to kind of creatively help them. So yeah, so it's definitely a challenge in that respect, but I do love what I do and I love helping them. So yeah, even new ones often come to me and I help them kind of get to where they need to be able to grow. So yeah, love it.
Fantastic. So really exciting plans, lots of growth plans, and the actual launch is happening when?
So sorry, Kristy, go for it.
No, you go.
Okay. So we're supposed to be launching at the end of Jan. A lot of paperwork is being done in the background, so we're just like trying to make sure that's when it's going to happen. We just need to make sure that everything is ticked off and everything is correct, but that's our objective. So it launches supposedly in the end of Jan, and it's going to be a 2-month fundraise. So it gives people like kind of time, it gives us time to fundraise the money. Once we reach like 400K, we then are able to like start spending that money. But if we don't reach 400K, then we have to give back the money. So it's about reaching that first milestone, but our objective is to get to £1 million. And the reason why it's actually just like 1 million, it's not more, because a lot of REITs open at a much larger amount, is because we want to make sure that we grow in a sustainable way from also the sourcing side as well as the provider side. We don't want to have all this money and not be able to spend it. Mm-hmm. So we're going to be like doing different rounds of fundraising. Obviously, the first one is going to be the more attractive one. So our returns are extremely small, just so that we can at least have like raise that money and for it to be attractive for investors as we start. But that's our time frames. Hopefully,
so we'll put in the show notes how people can contact you guys if people want to find out more about it and find out, you know, how to reach out to you guys if it's something that interests people. Is there anything else that you want to say? Anything else that we've not talked about that you think we should be covering here?
I don't think so.
Yeah. No. Like, again, like I wanted to thank you so much for having us and to giving us the platform to kind of talk about it. This month is going to be very intense. I have like a call about the REIT in like 2 hours. So it's going to be REIT all month long. And I feel like for the next 3 months it's going to be like that. But hopefully that, you know, it allows a lot of people that need it to be housed in an appropriate way. So hopefully we make it happen. But thank you so much for you know, giving us the platform to speak.
Yeah, I really appreciate it. Thanks.
No, it's great to talk to you both. Thank you. Thanks very much, guys. Take care.
Thank you.
Thanks.